The Federal Reserve, America's central bank, held its latest Federal Open Market Committee (FOMC) meeting on June 17, 18, 2025. Here's what came out of it. Hey everyone, let's dive into the latest from the U.S. Federal Reserve. At their meeting on June 17, 18, 2025, the Fed decided to keep their main interest rate, the federal funds rate, unchanged in the target range of 4.25% to 4.50%. This marks the fourth consecutive meeting they've held rates steady. Why no change? The Fed is playing a waiting game, looking for more solid evidence that inflation is consistently moving down towards their 2% target. While inflation has cooled significantly from its peak, the latest reports show it's still a bit sticky. For instance, the core personal consumption expenditures, PCE inflation, the Fed's preferred gauge, is now projected to be 3.0% by the end of 2025, a slight increase from their earlier forecast. The Fed's economic projections also showed a slightly downgraded outlook for economic growth, with GDP growth for 2025 now expected to be 1.4%, down from 1.7% previously. They also anticipate the unemployment rate to tick up to 4.2% by year end. Despite these cautious adjustments, the Fed did signal that they still expect 2 rate cuts later in 2025. This is a shift from their March projections, which had hinted at only 1 cut. However, they emphasized that any future rate cuts will be data dependent. They need greater confidence that inflation is firmly on its path down. So, the message from the Fed is clear. While they are closer to cutting rates, they remain vigilant, prioritizing price stability amidst a slowing but still resilient economy. It's a delicate balance,